Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on May 9th. So pretty quiet week for the major indexes. I think we're down pretty much flat on the week. The good news is our intermediate term trend model today, as I record this, is turning positive, which is just, it's not the be all end all, but it's another step forward in what I would say that is encouraging top down evidence. We had the panic selling at the lows, really historic panic selling and oversold readings and things like that. You had sentiment that was very bearish and frankly is still pretty bearish, looking at whether it's magazine covers or surveys or real money measures, it's pretty bearish. And then, when we did get going, we had some of the rare strength indicators, blast off indicators, the Zweig breadth thrust, our own 3-day thrust triggered. And so the tides is another step forward on that, which is all to the good. I would say that at least the way I go about it for individual growth stocks, we're still not seeing much leadership. Now, that's not bearish. It's more descriptive than predictive. And after a 27% decline or whatever it was in NASDAQ in 6.5 weeks, maybe we just need a little bit more time for that to happen. But kind of until it does, I'm content to go slow. We're still seeing a lot of stocks, including ones that held up very well during the last 2 months, approach their old highs and then get hit. A lot of times it's on earnings, but sometimes it's just on news. Sometimes it's just on selling. There's still a lot of selling on strength out there. That could easily change next week, but until it does, I'm content to go slow because until we have some real established leadership, which could hopefully happens next week or whatever, but until it happens, it's just going to be a tricky situation to make money, keep most of it, and it's going to be tricky for the market as we bump into some resistance levels, okay? In Cabot Growth Investors model portfolio, we got hit on one stock, small position. We bought a couple more small positions, but we're still 70% in cash ballpark. I'd rather be more like 50% cash, honestly. But a lot of the stocks that were on my watch list, looked ready to go and then got clonked, okay? Some of them aren't completely broken, but they just don't seem ready to go quite yet. So I'd like to be pulled into the market here if it happens next week. This is what I said a week ago. If it happens next week, we could really get aggressive quickly, but we want to see it happen first to really start the major buying spree, at least the way we go about it. Okay, that's enough of a preamble. Let's go into the charts. As usual, I'm using a product called Market Surge. You can learn more at marketsurge.com. It's a product of Investors Business Daily. So you can see here, we're leading off with the NASDAQ. Our Cabot tides is we just look at the 50-day, which is this, and the 25-day, which is this. And the rules are, if we're above the lower moving average, which is the 25-day line after a decline, and that moving average is trending higher, it's quote unquote positive. Okay, it's not an exact trend following indicators usually are not like to the minute, turns. But with that said, you can see the 25-day line has been turning up for the NASDAQ, which has been kind of the strongest index more recently. But nevertheless, all the indexes now are dropping off. Today we're dropping off this day. Next week we're going to be dropping off the April crash. And you can say that, well, we're only getting a buy signal because we're dropping off worse stuff, but that's how the indicator works. And let's not forget that we've had a nice bounce here and we really haven't given back any of it. We've hesitated this week, but so far we've had a hell of a recovery, number one, and number two, it's not like we recovered for 2 weeks and then fell apart again. Okay, and that's kind of the nature of the indicator. So they're all kind of turning positive here in the intermediate term. Just to run through the indexes is small caps. This is the weakest one, but it's hard to see here, but take my word for it. They are starting to perk up here, mid caps, okay, and even the New York Composite starting to, this will start to trend up here, assuming the index holds anywhere near these levels. Now, we are just back to the NASDAQ. We are still living below, this is the 200-day line, and I don't take that too lightly. I mean, I think we still have like 65% of S&P 1500 stocks or 60% of S&P 500 stocks or whatever, still below their 200-day line. So there's still a lot of overhead to chew through. There's still a lot of work to be done, I guess is my point. So when you combine that with what I was saying earlier, which we'll take a look at, kind of the lack of a lot of leadership, not many new highs, that sort of thing, it just leaves the door open to say like, hey, we could pull back in here. I think the odds strongly favor the lows are in. I think the odds strongly favor the next big move is up. And so if you own a broad mutual fund or you're talking about your 401k, there's really not much to really talk about here. But I think if you're talking about individual stocks that can move around quickly, which these days are most of them, timing does count. Okay, so we'll see how it goes. Right now, though, there's no question, like I said, on a top-down basis, things are good. I also find some encouragement that while they took bigger hits, this is the IPO fund, some of the growth-oriented things look a little bit stronger, kind of like the NASDAQ in the intermediate term. Okay, you can see the 25-day line here has been trending up here for a few days as compared to some of the other indexes that, it just kind of nicked it today, which is how we got the buy signal. This is the IPO fund. The ARK fund, not as much, but you can see it's, kind of rounding into form, things like that. The equal weight QQQ, same sort of thing, and actually a little bit stronger, toying with the 200-day line, okay? So still work to do, but it's good. And you combine that with, me, I like to look at the XLP, and it's just been stuck in here, consumer staples. It's just something to watch. If the market maybe starts to consolidate or ease back, the next week or two, and this thing starts soaring, day after day, that might be a little bit of a yellow flag. But so far, there's no rush into safety. There's been more rushing into maybe not leaders quite yet, but at least some, risk on type of names, okay? Now, with that said, I'm just going to run through a brief list here. This is lifetime holdings. This is not a buy list. This is the stocks that held up well. They were on my watch list, and it came into this week. A ton of them had earnings. I think I talked about this last week and said, hey, if these things get going, not that I'm going to go buy all of them, but we're going to extend our line. But this is a great example of what we saw, where you have this nice base. It had every excuse to get hit during the market meltdown, and it didn't. And, not a lot of buying volume in here, but then it reports earnings. It actually gaps up, and then boom. Now, this isn't the I wouldn't say this is like, your number one liquid leader. A lot of these stocks are a little, I wouldn't say thin, but, they're not, you're not talking about Apple or Nvidia or something like that. But clearly, there's a lot of people willing to sell into the numbers, and the numbers were good. The stock gapped up, but there's a lot of supply there. People are still repositioning their portfolios, okay? DoorDash. Now, DoorDash didn't have a great report. And I wouldn't say, this is an example of a name where I wouldn't say this is completely broken, but it doesn't look ready right now. And you can see the stock kind of had, it held up very well, had a nice double bottom base. Again, approached the highs on low volume, but if it had reacted well to earnings, great. Instead, it kind of looks more like a double top in here, okay? Argenx, this is one we've had a small position in this, I think going back to last summer. So we made money on it, but it's just, I had high hopes for it. It kind of held up in here, recouped to its highs, had a very reasonable correction, and then before and after earnings, you can see it just got clonked and, gapping below the 200-day line. TG Therapeutics was one I was TGTX, held up again, just had this nice run in here. It got hit a little bit with the market, but kind of came right back. Again, low volume in here, but, price kind of, when you're doing that in a bad market, it tells you something usually, and then it reports earnings. And I thought, some of these things could wobble on earnings, don't get me wrong, but to kind of just completely break down here doesn't mean it's going to $20 or $10, but it's going to need some time to repair that damage. Guardant Health, GH, another one. This is kind of like Lifetime Fitness, where actually I remember after hours saying, ooh, this is going to gap up to new highs. We'll see how it does the next day. And a week later, the thing's back towards its lows. So there's still a lot of that out there. And until that stops, and it can stop quickly. The tenor can change real quick, but until it does, and we start to see some stocks pop up and follow through, more than 2 or 4 of them, but see 30 of them, the market, which is, just to go back to the market real quick, the problem is eventually the market and a lot of stocks are going to run into resistance, whether it's 50-day or 200-day lines or prior highs or, this level up here. So if resistance is being used to really aggressively sell, it's going to be hard for the market usually to really have some sort of sustained rally, okay? We'll see how it goes, though. Like I said, that's descriptive, not predictive. I'm not saying it's bearish. I'm just saying right now, I wouldn't say from a bottoms-up perspective, individual stocks have really, truly kicked into gear, okay? Now, in terms of the good stuff, which there is a lot of good stuff, I don't want to spend too much of the bad. I wrote a Wealth Daily this week. I would say that cybersecurity and aerospace right now are kind of the two leading growthier sectors. When I say leading, I mean best looking. Cybersecurity is probably the best by far. Here's Okta, OKTA. There's a bunch in here. Zscaler, ZS. This does have a little bit of old overhead from, let's see, this was, over a year ago. So, it might hit some resistance. But the fact that it's been kind of like smoke up a chimney here above these levels real quickly on a million days up in a row is usually a good sign. Rubrik I've mentioned a bunch. Testing its old highs again, wouldn't surprise, given what we're seeing in the market, right? It wouldn't surprise me if this kind of gets up here and then does one of these things. But overall, clearly showing a lot of relative strength, new relative peak, relative performance highs. Most of this group hasn't reported earnings yet. They have an off year, so they will report within the next, say, 3 to 4 weeks from now. So that will be something to watch. But just going with the evidence today, that certainly looks good. Aerospace is another group. Carpenter Tech is a nice base. Some of these things have had already good runs. I might have mentioned this one last week. So it already had a good run, which does raise the possibility that there's still some weak hands in there that want to get out. That said, it also had a pretty good decline, and clearly, it wiped out a lot of these prior lows, and clearly has come back very nicely before and out. You can see the earnings gap and after earnings, and some good buying in there too. So that looks good. ATI, these are a little bit more, I don't want to say they're materials players. It's not like a materials, but it's sort of, a lot of them are specialty materials and parts for the aerospace sector. ATI, this one was more dead money for a while. You can see it kind of topped out over many months, got hit with the market, but it's really tennis balled back to new RP peaks or pretty close to it. Obviously a good post earnings reaction and follow through. Doesn't mean it can't pull back, but overall those look pretty good, okay? Just running through some others. So Palantir looks good. This is another one. So this is an example of one that, deep correction. It did hold this 80 level really nicely for many weeks. I mean, you can see it dip below there, here and there, but every time it did, it quickly snapped back, which was a good sign. And then again, it kind of had this low volume rally into its highs and got hit on earnings this week on Tuesday. That was Monday night into Tuesday. That said, it really didn't do anything wrong. It might need a little bit more time in here, but still above its moving averages, still holding, in the upper reaches of its consolidation. Now you come in next week and it's down here somewhere. It might be a different story, but so far so good on Palantir. A couple of gappers today. We'll see how we close. I'm recording this, like I said, it's 11:15 in the morning Eastern time. So we'll see how we close. But this is TOST. Overall, kind of a bigger consolidation since last November. Sort of a double bottom, whatever you want to call it. It's been holding the 200-day line. It gaps on earnings today. Pretty big volume. So we'll see how it closes, but certainly one that's probably going to be on my watch list after today, depending how it closes. Insulet, PODD. This was in top 10, and it's just it had a big shakeout last year, 2 years ago, and it's been making its way back. But you can just kind of see it's had this kind of long, slow base breakout, nice move, but just kind of stalled out here. So it hasn't been hot. It's not overowned, is my point. It's not up fivefold in the last 18 months, and then a very nice earnings gap today after earnings last night, I believe it was. Okay, GE Vernova. GEV. Wrong symbol. Yeah, GEV. So this is one where, it is hitting some resistance here, round number resistance near 400. There's, prior highs and yada, yada. But this is, to this point, this could easily pull back and look fine. You know what I mean? So what we're looking for is if we do get some of these names that hit resistance and are selling off, that's okay. You just don't want to see like some of those names I mentioned earlier, like Lifetime Fitness, where it's just like, boom. This sort of thing, this is barely pulled back. But even if it did pull back in here, you could say, hey, that's pretty normal given this off the bottom run, and it could be part of a bigger base building effort. Not to go on too much of a tangent, but you get what you pay for with these videos. So when you do have a correction that's more than 40%, it depends on the market environment. This one was a very sharp downturn so far. But usually once you kind of come all the way back, you expend a lot of energy. It's not unusual to almost have a new base within the base. Meaning, what does that mean, Mike, in regular English? You might spend 4 or 5 weeks consolidating, and it wouldn't be unusual for some of these names to pull back and consolidate for 2, 3, 4, 5 weeks, kind of in this zone, and then break out. I'm not predicting that. I'm just saying something to be aware of when you have these sort of deep corrections and then deep comebacks. Okay. Either way, Verona looks pretty good. Uber is another name that looks good to me. I like the fact that it's had this sort of year-long consolidation in here. I like this big volume clue. That was when, was it Ackman bought a position or whatever? Somebody bought a position in there, and it was announced. Okay. And then it's kind of marched back in there. Yes, there's been some selling this week on earnings, but not much damage this week. Okay. And it's holding near its highs. Now, again, given the pattern, maybe you do see some, it hits its high, it's backing off. But like Vernova, it could pull back a little bit in here and still look good. It's on my watch list. I think it looks pretty good so far. Roblox, I can't type today, RBLX, sorry about that. Nice base in here. And again, it kind of hit its price. You can see it hesitated, kind of came in, hit the 200-day line, and then whoosh, smoke up a chimney for 4 weeks and a nice positive reaction to earnings. And now you're in day, 4 or 5, I guess, day 5 of the consolidation in here. Maybe it goes on longer, maybe it falls apart, but so far, this certainly, with this accelerated run higher, looks pretty good. And if it can kind of hold, the longer it can hold up here, the greater the odds it can pop out of here eventually. Some of these names that aren't like exciting, but Badger Meter, this one we didn't even get our buy range. It didn't dip into our buy range in top 10, but you just kind of have this, again, kind of a long, slow topping period. It gets hit with the market and then boom, both pre and post earnings, really recovers all the way back to its highs. I think it's 4% off its highs or something like that. So BMI, that looks pretty good. We had mentioned Amphenol, same sort of thing. These sort of things that, they're just kind of doing this. They top out, they get hit with the market, and then whoosh, they come right back. Those are things to monitor, especially if they do cool off or shake out a little bit, okay? I did want to mention Bitcoin. This one's been rounding out. If this was a stock, you would say just a chart, which it's not. But if it was, you would just say, wow, that's a nice looking base with all these tight closes at the bottom. It held the 200-day line. Now it's ramping up. So I'm not a huge Bitcoin expert, but the fact that it's acting this well is probably a good risk on sign anyway. And Bitcoin itself, or Bitcoin related stocks, if you want to go there, I think look pretty good. And then last but not least, I just want to mention some stocks that, I'm mentioning stocks that are near their highs. That's kind of how I mostly operate, because once they're clear of overhead, you can get some big runs. If you're a little shorter term, there's nothing wrong with that. Just looking at some names that are sort of off the bottom. This is Wingstop, which I had mentioned a couple weeks ago because it did start to show some relative strength after the March low here. You can see it kind of had a double bottom, even though the market tanked to lower lows. And then it did react well to earnings here last week sometime. Still below, it's got resistance, got 200-day line, blah, blah, blah. So it's not really my cup of tea, but this is one of these names where there should be some support in here, assuming the market doesn't implode, but there should be some support in here on dips. So maybe on a shorter term play. TWLO, same sort of thing. You can just see this sort of, you're trying to look for, if you're doing off the bottom stuff, at least to me, I'm looking for something exceptional. It could be exceptional volume or just something that's different than just like, oh, it's going up a little bit. Many days up in a row, accelerating volume here, positive reaction to earnings above the moving averages. Again, there's resistance in these areas, so, buyer beware. But I'm just flagging some relative strength for some of these former stocks that did come down 50%. And, there's nothing that says they can't rally another 10 or 20% on the upside, especially if the market does well. ServiceNow is another one. You can see the stock went from 12 to 7, okay, 1,200 to 700, but 12 to 7. But did bottom out here in general and then really kind of accelerated higher after earnings. And since earnings has just been, another thing I'm seeing is some of these stocks, they're just acting much differently. You're not seeing the stocks gap and go up and down 10% a day. It's just much more under control, quiet and all that. 1,000 could be round number resistance here. We'll see. But there are some names that are reacting well to earnings in a big way, not like, they didn't fall 90% and gap up 5%, that are reacting well to earnings in a big way, have the liquidity, still have good numbers. They're probably not done or anything like that. So if you want to try to play some of these, you can, okay? Just back to the market, I would just say in summation, bigger picture, I think the lows are very, very likely in. The odds strongly favored, I'll put it that way. And I think looking out 6-12 months will probably be nicely higher. The question is, what about the next few weeks? Okay. And until we see leadership, we're seeing more and more positive signs from a top down basis. Intermediate term trend turn up. If we can get above the 200-day lines and stay there, that would be another positive step, from a top down point of view. That would be good. But what I'd really like to see now is just more individual stocks participate. It might just be a matter of time. They just might need a little bit more time to wear through some of the sellers. Some people reposition their portfolios, things like that. But I'd like to see just some more breakouts and some more breakouts and follow-throughs on the upside, as opposed to selling on strength and hesitation and things like that. If we do see that, and of course the market itself is heading higher, I think that would be kind of a go signal. But like I said last week, I want to wait for it to actually happen before acting on it. Okay, that's all the time I have for today. As always, thanks for listening and watching, and be sure to come by again next week for another Cabot Weekly Review.